There are several different trading strategies that you can use to profit in trading. There's no one set strategy that is just the winner and every other strategy is the loser. You can make money with anything that works for you, and that is solely what I suggest. I will never tell you that one strategy is better than the other. I will never tell you that if you use this strategy instead of that strategy and you have to use my strategy, then you're going to win more trades than somebody who uses something else. I solely just don't believe that. In trading, it is about what works for the trader. The trader themselves is the one that is controlling their mindset, controlling their entries, their exits, etc. So do what works for you at the end of the day and not what somebody else persuades you to think that works. Today, I'm going to outline one of 3 of my favorite strategies, a strategy that I've been using very much recently. This strategy involves imbalances. And you might be saying, Jake, why aren't you saying fair value gap? Well, actually, I'm not a fan of ICT concepts. The only ICT concept I use, if you want to call it that, is an imbalance, okay? An imbalance has been around since the 1900s to the late 1900s when floor traders would use them to track unbalanced orders in the market. ICT only took them later in life and rebranded him. So just because somebody is trading with imbalances does not mean that they fully agree with ICT concepts. So without further ado, don't forget to like, subscribe, share the video, share the content, etc. And let's get into the charts to go over this imbalance strategy. So now that we are actually on the charts, I'm going to be explaining what this strategy is, what an imbalance is, what levels I look for to take trades off of, how I'm actually taking trades off these levels, and then I'm going to show you the exact trade I took today using this strategy that helped me make just about $2,000 plus. But first, before I get started, I want to announce something. I use this trade today to take it on my Apex PA accounts. I am now sponsored by Apex, one of the most reliable and trusted prop firms out there. So if you use code JMM at checkout, you will get a percentage off your order. Apex is using awesome sales right now that you can get started with funded trading for like $20 if you use specific codes and stuff like that. You really can't beat Apex and the prices of it and stuff like that. Okay, so now let's actually get into what an imbalance is. So an imbalance is just a gap in price that has yet to be filled. So as you guys can see, let's start up here. Up here, all these candles are consolidated together. The 3 candle pattern here that you have 1, 2, 3 candles, even the 4th one here. There's no really way to mark off any gaps. But if we look down here at what these gaps are, you take this first candle, it's a 3 candle pattern. You take this first candle, you take this second candle, and you take this third candle here. From this bottom wick to this top wick, you can see that there is a space that is yet to be filled by any type of price action and or data. That right there is called an imbalance. And unfortunately these days, ICT, Inner Circle Trader, has made it known as a fair value gap. But floor traders back in the 1900s, all the way up to the early 2000s, use this as an imbalance. You take the bottom wick and the top wick, this whole place becomes your unfilled imbalance. Same thing, if you had a bullish imbalance, you'd take the top wick up to the bottom wick and you'd wait for price to fill it bullishly. So this is exactly what an imbalance is. So now what I'm going to do is I'm going to actually show you guys proof of the trade that I took today, and then I'm going to explain the strategy and how I used it. Okay guys, so here we are on the first trading day of August. As you guys can see, we have a trade that we took on NQ, profiting just about, $1,981, just about $2,000. So this is actually my trading journal right here, TradeZella. So another thing, I'm sponsored by TradeZella. I love TradeZella. They give you all the statistics on your trades. As you guys can see right here, you can get all the statistics you need to help outline your trade. It shows you a replay of your trade if you need one. It shows you all the statistics, how much you risked, where your stop loss was, etc. So it really can't get much better than TradeZella. Please use code JMTRADEZ with a Z on the end of it if you want a percentage off your checkout order at TradeZella. All the codes will be down in the bottom left right corner, something like that, and you can put them in and use them for yourself and get a percentage off, because who doesn't want that when they're making a purchase? So now that we are actually on the charts here, I'm going to use gold to outline the strategy and what I'm actually looking for. So the first thing that you have to do before market open is mark out your key levels that you want price to be trading off of. So I come into price action to the trading session with the same levels marked off every single day. And that is London session high, London session low, and 1 hour swing points. So let's go do that. So we go to the 30-minute chart here on gold. we can actually see that if we take this vertical line here, this is what I like to do, the vertical line tool, as you guys can see, that's one of my favorite tools to use. What I'll do is I'll go to the previous trading sessions night. So this would be Monday at 12 a.m. and then I'll take another one and I'll do Monday at 6 a.m. So now what we'll do is we'll look at this and we will mark off the low of in between those two boxes and the high of in between these two lines that create a box. So now you have your London session high, you have your London session low. You also could go down to the hour time frame and look for 1 hour swing points. So what do we have right here? We have a 1 hour swing point right here. Any 1 hour swing point can work. It doesn't have to be within this box. Now here I am on NQ. You guys can actually see the trade I took today. So what did I do? I had my previous day low, my previous day high. I had my London session high, my London session low, and then I had this 1 hour swing point marked up here. As you guys can see, price came down, chopped around for a little bit, made a little swing point high up here, and then dumped even farther. So these are the points that I had marked off today. So let's actually switch down to the 1 minute time frame where you are looking to take your entry. Boom. So let's look at this. We have the 1 hour swing point here. Price breaks through it, creating a very small, and I'll zoom in, as you can see, I outlined it with an arrow so you guys can see a very, very small imbalance. If you zoom in right here, you can see the imbalance is from this wick right here to this next wick right here. It's an imbalance. It is extremely, extremely small, but it is an imbalance. So what did we wait for price to do? We waited for price to pull back, continue to reject, show us a bullish reaction just like it did there. And next thing you know, we're able to take the trade. We're able to ride it up to take profit. So there's proof of today's trade, but let me actually now outline what you can be looking for when you are looking to take these trades, and not just on a trade that I took today, a more broad generalized aspect of what you can be looking for to take these trades. Okay, so let's start with just understanding what we are looking to mark off. So first, let's just for purposes here, let's say that right on this line right here is our pre-market high. This is London session high. So how you mark out London session high is up to you. Just make sure you mark out London session high, London session low. You can mark off previous day high and low if you want to do that as well. But the three levels that I recommend are London session high, London session low, and any 1 hour swing point. Okay, so let's say this line right here, just for kicks and giggles, is your London high. What does price do? Price breaks all the way above London high with extreme volume. So that's what you want to see. That's step one. You want to see price come to your key level and start trading off of it. Next thing you want is for the candle that helped reach the level. So this candle right here is the one that pushed up in and above the level. You want to see a gap be created in between that. So what do we have right here? We have this top wick over to this bottom wick right here. That is your imbalance gap. Now you either wait for price to come back down, reject it like it did here, and bounce all the way up, or you wait for price to inverse it. So let's go over some certain things that we're looking for. Here on this specific trade, price came back down, gave us the perfect reaction off of it, just like that. The next thing you know, you can enter a trade right here off this bullish one. Give your stop a little room to breathe because we are on the 1 minute time frame. I recommend the bottom of this fat candle that gave us the move up. And look at this. Eventually you get the move up, trading off the imbalance. You could have taken it all the way up here. I mean, I'm assuming you guys would take profit before that, but you kind of gave yourself a nice 3.74, 3 to 4. And look how price continues to respect the imbalance. I mean, we have a bounce here, you know, we have a bounce right here. Price continues to respect these imbalances in such a good way. But, you know, price is not always going to bounce off of these imbalances. So what are you sometimes looking for? Let's say price created the same imbalance here off London session high, but instead of bouncing off like this, price decided to come down and close below the imbalance here and give us a candle closure below the imbalance? Well, it is as simple as you are now looking for a short position. You put in your thing, you log in your short position, and you can target London session low or other structure points depending on how you take your trades. It is seriously that simple. You are looking for inverses of imbalances or rejections off imbalances at London session high, London session low, or 1 hour swing points. So yeah, guys, I really hope you guys enjoyed this video and you're able to get some knowledge and understanding of how I use my imbalance strategy. I trade simply price action. I don't go for ICT concepts or anything like this. I trade simply price action, supply and demand, support and resistance, 15-minute orb, this power levels imbalance strategy. So if you guys have any questions, feel free to email me. The email is in the description. Don't forget to use the codes that are attached in the bottom left corner of this video if you want to get percentage off at TradeZella and Apex Trader Funding. And I hope to see you guys in the next one. Love you guys very, very